Reliance Industries has reported the steady third quarter. Consolidated revenue has come in at 4% quarter on quarter. The number we're looking at is 2.65 lakh crores. It beats estimates. And EBITDA has largely been flat. It's up just about 0.3%. Margins have held, though, at 17.4%. And net profit has risen, but a very modest 3% at 18,645 crore rupees, which is slightly below street expectations. So at the segment level, retail has led the growth for Reliance, 8% rise in revenue there. Digital remains resilient, and the O2C part has seen marginal revenue growth, but there is a strong 10% jump in EBITDA on margin expansion. And if you look at oil and gas, that has stayed under pressure, which makes this a stable but unspectacular quarter. But let's see if Mr. Chokalimbam agrees. He's joining us. He's founder and MD at Economics Research. Thanks for making the time, Mr. Chokalingam. Now, Reliance, like I was telling our viewers, beating revenue estimates, but profits and EBITDA, they're largely flat. So is this a temporary pause in the earnings cycle, or do you think this is a sign that growth is now getting harder to deliver?
Yeah, good evening. It is true there is a pressure on the bottom line, though the revenue has grown in double digits. Yes, it might stay in this way for another 1 or 2 quarters, because there is a pressure from oil and gas, and also there is a pressure from the retail segment in terms of margin. So I firmly believe that the profit growth may not be great for next 1 or 2 quarters, but however, there is a very much possibility of valuation multiple getting re-rated, because now digital business alone, digital business and the retail business account a dominating share. The traditional oil and gas and chemical business put together accounts for only 42% of the total profit. So in the short term, the valuation multiple re-rating should help. In the medium to long term, that is beyond 2 quarters, diversification into AI and expansion of further digital should help. Therefore, I still remain positive on the stock. The most important noteworthy point is that the digital segment has grown its profit by 16% year on year, and the ARPU, the average revenue per user, continues to be in growth mode. As you also mentioned, oil to chemical also remains in growth mode.
Yes.
So these 2 segments, digital and oil to chemical, the profit accounts for 70% of the total profit. Since these 2 are in growth mode, I believe they can help, but still overall profit growth could be in single digit only for 1 or 2 quarters.
Right.
So the investors can bank on valuation re-rating in the short term.
All right, Mr. Chokalingam. We leave it there. Appreciate you joining us tonight. Many thanks.